Within the Reference Guide to Regulatory Compliance, Subpart 8, Securities, Insurance, and Other Financial Service Regulations, I'm reading Chapter 2, which is Government Securities Act. The Government Securities Act of 1986 amended the Securities Exchange Act of 1934 by authorizing the Secretary of the Treasury to create regulations to govern the financial responsibility and record-keeping of government securities, brokers, and dealers, including financial institutions. The regulations issued by the Treasury Department apply to banks involved in selling and trading government securities. In 1993, the Government Securities Act amendments authorized the banking regulatory agencies to adopt rules to prevent fraud and manipulative acts in government securities transactions. The agencies adopted these rules effective July 1st of 1997. Coverage. Associated persons, a bank that's not considered an associated person, and directors and officers. Associated persons are persons directly engaged in underwriting, trading, or selling government securities. 2, persons engaged in providing financial advisory or consultant services for issuers in connection with issuing government securities. 3, persons engaged in researching or giving investment advice with respect to underwriting, trading, or selling government securities, or providing financial advice or consulting services for issuers of government securities. 4, persons engaged in other activities that involve communication directly or indirectly with public investors in government securities in connection with underwriting, trading, or selling government securities, or providing financial advice or consulting services for issuers of government securities, and persons supervising the processing and clearance activities with respect to government services or maintaining the records involved in the underwriting, selling, or trading of government securities, or the providing of financial advice to issuers of government securities. 6, a person other than a person whose functions are solely clerical or ministerial. A bank is not considered to be an associated person if its sole functions are in a fiduciary capacity and it is subject to examination by a federal regulatory agency. 2, a bank is not considered to be an associated person if its sole government securities activities are carried out without exercising discretion but solely at the discretion of the customer, or carried out without giving investment advice, or performed without receiving transaction-based compensation. Directors and officers are covered. These are directors and officers of a bank. They will not be considered to be associated persons by virtue of the fact that they set broad policy guidelines of the bank that are not directly related to the conduct of the bank's government securities business. Registration requirements. A, B, and C. Every associated person of a bank that is a government securities dealer or broker must file a Form G-FIN-4 or a Form U-4 or a Form MSD-4 with the bank. 1. If the information on any registration form becomes inaccurate, the associated person must correct it promptly. And 2. The bank must verify accuracy of forms filed by inquiring of all other employers of the associated person within the past 3 years concerning the information provided. B. Banks that are government securities dealers or brokers must obtain and within 10 days thereof file with its regulatory agency all forms G-FIN-4 and a list of associated persons who have filed forms U-4 and forms MSD-4. With the bank. And 2. File forms G-FIN-5, Form U-5, and Form MSD-5 within 30 days of the termination of the status of an individual as an associated person. This filing is not required if the bank A. notifies the regulatory agency that the person will remain employed by the bank, or B. continues to update previous filings, and C. files a copy of a Form G-FIN-5 within 30 days of the individual's termination of employment. If any information on any notice of status as a government securities broker or dealer becomes inaccurate, the bank must file an amendment of Form BD correcting such information. Notice of withdrawal is Section 3. There's A, B, and C under the notice of withdrawal. A, if a bank ceases to act as a government securities broker or dealer, it must file Form G-FIN-W with the regulatory agency. And B, such notice of withdrawal must be effective 60 days after filing unless the regulatory agency determines that a shorter time period should be enforced. And C, if the notice of withdrawal is filed after the regulatory agency acts to censor, limit, suspend, or bar the bank from acting as a government securities broker or dealer, the notice of withdrawal will be effective as determined by the regulatory agency. Exemptions. A, if a financial institution will be exempt from these regulations unless it holds itself out as a government securities broker or actively participates in purchase or sales of government securities on an agency basis. And B, a financial institution will not be covered if 1, it affects fewer than 500 government securities transactions per year, or it's quite a few. 2, affects all transactions through a registered government securities broker or dealer, provided that A, B, C, and D, A, broker or dealer is clearly identified as the one conducting the transaction. B, financial institution employees provide only clerical, administerial or order-taking services. C, financial institution employees receive compensation only for clerical, administerial or order-taking duties. And D, transactions are conducted on a fully disclosed basis. And lastly, C, under exemptions, is that a financial institution will be exempt from government securities dealer regulations if its activities are limited to sales or purchases in the fiduciary capacity, or 2, the sale and subsequent repurchase and the purchase and subsequent resale of government securities under a repurchase or reverse repurchase agreement. Subpart 5, Federal Banking Agency Rules, Government Security Sales Practices, and this has a coverage requirements agency interpretation section. Under coverage, all depository institutions regulated by the Office of the Comptroller of the Currency, FDIC, or Federal Reserve Board that are required to file a notice as a government securities broker or dealer, and others covered as institutional customers, entities other than natural persons, that is, and 3, non-institutional customers that are natural persons. The requirements under the Federal Banking Agency rules for government security sales practices is business conduct, recommendations to customers, and also involving non-institutional trades. For business conduct, a bank that is a government securities broker or dealer must observe high standards of commercial honor and abide by just and honorable principles of trade. Recommendations to consumers. Banks must have reasonable grounds for believing the recommendation is suitable for the customer on the basis of facts about the customer's security holdings and financial institution. And for non-institutional trades, before executing a transaction recommended to a non-institutional customer, a bank must make reasonable efforts to obtain the following information: that's the customer's financial status, tax status, investment objectives, and other information that's considered to be reasonable in making recommendations to the customer. Agency interpretations under the Federal Banking Agency rules for government security sales practices. 1, banks have a duty to meet the same standards of professionalism and good faith regardless of the financial circumstances of the customer. And 2, the bank must have reasonable grounds for believing a recommendation is suitable for the customer. 3, the most important considerations in determining the scope of the bank's responsibility to the customer are: A, a customer's capability to evaluate an investment risk independently, and B, the extent to which the customer is exercising independent judgment in evaluating the bank's recommendations. Institutional customers may not have the capability to evaluate risks appropriately in cases of a new investment product, and the bank can conclude that the customer is exercising independent judgment if the decision is based on its own independent assessment of the opportunities and risks. If the bank independent assessment of the opportunity, if the bank has reasonable grounds to conclude the customer is capable of independent valuation, it has fulfilled its obligation. More agency interpretations under the agency rules for governments and security sales practices. You have the customer's ability to make informed investment decisions depends on the resources available to the customer. The bank should consider A through D. A, the customer's use of consultants, investment advisors of the bank's trust department. B, the general level of expertise the institutional customer has in financial markets. C, the customer's ability to independently evaluate how market developments would affect the security. And D, the complexity of the security or securities involved. 5. The nature of the relationship between the customer and the bank must also be considered when determining whether an independent decision is made. The considerations are A through D. A. Any written or oral understanding between the bank and the customer regarding the relationship and services to be rendered. B. The presence or absence of a pattern of acceptance of the bank's recommendations. C. The use by the customer of ideas, suggestions, market views, and information obtained from others, brokers, dealers, market professionals, and so forth. And D, the extent to which the bank has received current and comprehensive information from the customer in connection with proposed transactions. Other SEC rules. Banks that are government securities brokers or dealers must comply with the SEC rules for brokers and dealers pertaining to the hypothecation of customer securities and the use of customers' free credit balances and lastly, protection of reserves. Custody of securities. Subpart 7. Regulated banks. 1. If a bank is regulated by a federal regulatory agency, it will not be subject to the custodial requirements of the Government Securities Act for government securities held for customers in a fiduciary capacity. If the bank adopts policies and procedures to apply the requirements of the regulatory agency, and custodial holdings are subject to periodic regulatory examination. 2, under the section about regulated banks, is that the bank regulatory agency requirements for government securities held in a fiduciary capacity. I guess for custody of securities, A through L here are requirements that applicable state laws must be followed. Government securities must be segregated from the bank securities. C, no liens or pledges or other charges may be placed against the government securities. D, the customer's government securities may not be sold under repurchase agreement or loans to any party unless customer has agreed in writing. E, no repurchase sales are permitted even with permission unless the customer is adequately compensated and the compensation is agreed to in writing. F, repurchase agreements must be collateralized with securities of equal quality, marketability, and interest rate. G, bank records must clearly identify the fiduciary capacity of the bank and the agreement with the customer. It must also describe the government securities, the customer's interests, and the transactions involving the government securities, including interest payments. Each customer must get a safekeeping receipt for government securities. I, adequate internal controls within the bank must be maintained. J, adequate controls against outside crime must be maintained. And K, independent audit of assets and procedures must be conducted annually. L, fiduciary capacity must be adequately supervised. And Section B under custody of securities. The custodial requirements of the Government Securities Act apply to the fully paid and excess margin government securities account held for customers by a bank in its capacity as a broker or dealer, and the government securities that are the subject of a repurchase agreement between the bank and a third party. And third, all government securities activities of banks that are not subject to federal regulatory review. Beyond what the custodial requirements of the Government Securities Act apply to, there are certain requirements for those that the Government Securities Act applies to, and those are A, maintaining possession and control of government securities by segregating them from the assets of the bank. B, keeping the government securities free from any lien, charge, or claim of any third party or other bank. And if the government securities are kept at another institution, the bank must notify the other institution that the securities are customer securities. 2, the custodian institution must maintain the securities in an account designated for customers of the bank that does not contain securities for the bank. 3, the bank must instruct the custodian institution to maintain such securities free of any lien or charge. And 4, the custodian institution must keep securities separate from any others held for the bank's account. D, if government securities are kept at a Federal Reserve Bank, charges or liens by the Federal Reserve Bank must expressly exclude customer securities. And if a lien is taken against customer securities, the bank must diligently take action to provide other collateral to the Federal Reserve Bank and have the lien released from the customer securities broker and dealer, and must keep such securities segregated unless the bank is a clearing bank or the securities are collateral for an extension of clearing credit. And 3, the clearing bank notifies the broker or dealer's regulatory agency when it does not segregate the securities as of the close of a business day. F, a bank may lend securities to a third party pursuant to the written agreement of the customer if the loan is in compliance with the bank's Federal Supervisory Agency rules. If the bank must issue a safekeeping receipt for securities held unless customer is a non-U.S. citizen residing outside the United States and the customer waives the right to a receipt in writing. H, under requirements of custodial requirements under the Government Securities Act, you have records of government securities held for customers must be kept separately from other records of the bank, and must provide a system for identifying each customer and each security, and describe the customer's interest in the securities, and indicate all receipts and deliveries of government securities and all receipts and disbursements of cash by the bank for such government securities. 4th, keep copies of safekeeping receipts issued. And 5th, provide an adequate basis for an audit. Another custodial requirement is that the bank must conduct account of government securities at least annually and must reconcile the account with customer account records. I, 2, and 3. I, the account may be conducted by the institutions on whose books the securities are kept. And 2, the account must verify any securities that for longer than 30 days have been in transfer, in transit, pledged, loaned, borrowed, deposited, not received, not delivered, subject to repurchase, or not in the physical possession of the bank. And 3rd, the bank must record the dates and results of the count with reconciliation and documented differences noted in a security count difference account not later than 7 business days after the count. The bank must treat a government securities broker or dealer as a customer. And the last custodial requirement is the bank must maintain records for not less than 6 years, and for the first 2 years they must be in easily accessible place. Custodial requirements of the Government Securities Act that apply to all banks include quite a bit here. 1 through 6. There's exemptions and record retention and enforcement that I'm going to just keep running through here. All banks must not violate the requirement to maintain possession or control of government securities if temporary lags occur solely as a result of normal business operations, provided the bank takes timely steps in good faith to get possession or control of the government securities. And 2, if the bank accepts funds from the customer and does not initiate the purchase of the securities the next business day, the bank must redeposit the funds and notify the customer. 3, each day the bank must determine the quantity and issue of securities that are required to be but are not in the bank's control, and must promptly obtain the release of any lien against securities, and promptly obtain the return of any securities loaned, and take steps to obtain possession or control of securities loaned and not received, for more than 30 days, and take steps to buy in securities as necessary to the extent any shortage of securities in possession or control cannot be resolved. The bank must prepare, this is the 4th custodial requirement for all banks, is that they must prepare and maintain a current detailed description of the procedures used to comply with possession or control requirements that make such description available to its regulatory agency on request. 5th, except for repurchase agreements between a bank and a broker or dealer, a registered municipal securities dealer, or a director or principal officer of the bank when a bank maintains securities that are the subject of a repurchase agreement between the bank and a counterparty. The bank must A. Obtain the repurchase agreement in writing, B. Confirm in writing the specific securities that are the subject of the repurchase agreement at the end of the day that the transaction is initiated, and at the end of any day in which the securities are substituted if there is any change in the type or term of the security. And confirmation 1, 2, and 3 must specify the issuer maturity date, coupon rate, par amount, and market value of the security. 2 must identify a CUSIP or mortgage-backed security number, and 3 may be waived by a non-U.S. citizen residing outside the United States. Interesting. D. And this is all under repurchase agreements, except for repurchase agreements between a bank and a broker or dealer, a registered municipal securities dealer, or director or principal officer of the bank when the bank maintains securities that are the subject of a repurchase agreement between the bank and a counterparty. The bank must, fourth, advise the counterparty in the repurchase agreement that the funds held by the bank in a repurchase transaction are not insured by FDIC. Fifth, include a provision in the repurchase agreement whereby the bank can substitute securities if the counterparty agrees. Sixth, include the required disclosure in a repurchase agreement if the counterparty agrees to allow the bank to substitute securities. And seventh, maintain possession or control of securities that are the subject of the repurchase agreement in compliance with the custodial holding regulations. A sixth custodial requirement for all banks is that government securities that are branches of foreign banks are required to keep a certain amount of funds set aside in the account at an assured bank. I don't think that was written right, but we'll go with it. The exemptions here in subpart 8 apply to institutions whose only government securities handling in U.S. savings bonds and other exempt activities. B. Institutions whose only government securities activity is submission of tenders for the accounts of customers for purchase of original issue of U.S. Treasury securities. And C. A bank will be exempt unless it acts as a government securities broker by holding itself out as a government securities broker or actively soliciting purchases or sales of government securities on an agency basis. Further exempt are banks with limited broker activities. Even if the bank holds itself out as a broker or actively solicits government securities, it will be exempt if it has fewer than 500 government security brokerage transactions per year, not counting U.S. savings bonds transactions or tenders for the accounts of customers for the purchase of U.S. Treasury securities, or 2. Conducts government securities based under a contract with a registered government securities broker or dealer that agrees to offer securities services on or off the premises of the bank, provided that 1, 2, 3, and 4. 1. The government securities broker or dealer is clearly identified to customers as the one performing the security services. 2. Bank employees perform only clerical and ministerial functions. C. Bank employees do not receive compensation for government securities activities other than clerical and ministerial functions unless the employees are associated persons or registered representatives of the government securities broker. And fourth, services are provided on a fully disclosed basis. The government securities broker maintains all required information regarding each customer. Further exempt is banks with limited dealer activity. A bank will be exempt if its government securities activities are limited to one or more of the following: sales or purchases in a fiduciary capacity, and sales or repurchases subject to a repurchase or reverse repurchase agreement. Further exempt are corporate credit unions dealing with other credit unions and limited government securities activities, or branches of foreign banks are exempt if all the customers with whom they engage in government securities transactions are foreign governments, agencies of foreign governments, and other non-U.S. citizens who reside outside the United States, and government securities brokers and dealers who are not U.S. residents. Under record retention, banks must comply with the record retention requirements of government securities brokers and dealers unless 1, the bank is subject to record-keeping requirements of the OCC, FDIC, or Fed. 2, the bank complies with the record-keeping requirements on the custodial holding section of the Government Securities Act. And 3, the bank makes and keeps current the following: A securities record or ledger that reflects separately for each government security as of the settlement dates, the long or short positions, and shows 1, 2, and 3, the location of all government securities long, the offsetting position to all government securities short, and the name of the account in which the position is carried. Oh my gosh. A bank makes and keeps current the following: 2, 3, and 4 to a complete and current form, GFIN 4, Form U4, Form MSD 4 for each associated person, and the same GFIN 5, Form U5, or Form MSD 5 for each associated person whose association has been terminated, and D, a complete and current Form GFIN, and if applicable, Form GFIN W. Record preservation timetable. 1, 2, and 3. Securities record or ledger reflecting all government securities and their positions must be kept for not less than 6 years, and the first 2 years in an accessible location. And 2, Form GFIN 4, U4, MSD 4, 5, US5, U5, or MSD 5 must be kept for 3 years after the person has been terminated employment with the bank, and Form GFIN or GFIN W must be kept for at least 3 years after the bank has ceased to function as a government securities broker or dealer. Enforcement is $7,500, $37,500, or $1.375 million, as described in other regulations.